Well, so technology is changing lots of things in the profession, but there's a lot of things that's also not changing. It's not changing the basic concepts around what debits and credits and how an audit works. Those general principles are all the same. So the theoretical knowledge that people need to learn from accounting qualifications is in some ways the same as it was 20, 30 years ago. What is changing is the way in which people are applying these things in practice. So if they're using different kinds of software to do risk assessments in audit, for example, then it's really important that when they come and do professional exams with the AIA, that they are also being exposed to those kinds of software, so that then when they then subsequently go back to work in practice, they are ready and fit for purpose. So the embrace of technology brings a huge number of efficiency gains. It really automates a lot of low-level tasks for accountants, which is great, and firms and clients alike can benefit from those processes. However, it comes with a lot of risks at the same time as well, because increasingly sophisticated black box technologies produce outputs that sometimes people don't understand, or sometimes produce results that look plausible but are in fact incorrect. And then if that produces an opinion for an audit, for example, that proves to be problematic, no one's going to come back and sue the black box technology. They'll come back and reprimand the human auditor in question. And it's humans that have to sign off on these things. So these risks that are posed to accountants mean that they have to double and triple check things and make sure that they're really confident that if they're attaching their name to something, then it makes sense. It makes sense for them.